And this meeting is being recorded. Hi, everyone. Thank you for joining us in this second room. This is our second round, and our presentation here is insured preparedness and the claims process. My name is Patricia Dorn with the Maryland Insurance Administration with the Consumer Education and Advocacy Unit. We're tasked with creating brochures, documents, doing presentations like this, educating Marylanders about insurance. And like I said, we are being recorded. If you do have questions, if you can put them in the chat throughout the presentation, and then at any point during the presentation, you can put those in the chat. I'll try to get to them when I can. It might not be until the end. And then there may be time, if there's anybody on here, because there were a couple last time that joined us by phone, there might be an opportunity where you can unmute yourself as well. And so again, my name is Patricia Dorn, and let's get started. Insurance preparedness and the claims process. So this presentation does not provide legal advice. You should discuss specific questions with a trusted financial advisor or insurance producer. So I'm going to go into a little detail about who the Maryland Insurance Administration is, what our agency does. We're the Maryland state agency that regulates insurance in Maryland. So the Maryland Insurance Administration licenses the insurers and the insurance producers. And when I say insurance producers, we mean the agents and the brokers. We examine the business practices of the licensees to ensure compliance with state law and any other applicable laws. We monitor the solvency of insurers. So we make sure that those insurance companies have the money to pay their claims. We review and approve insurance policy forms. And we review insurance rates to ensure that those rates that are charged in Maryland are not inadequate. So they're collecting enough money to be able to pay claims, but that they're also not excessive or unfairly discriminatory. We investigate consumer and provider complaints and allegations of insurance fraud. There is a link below to a video on the state of Maryland website. The Maryland Insurance Administration has a lot of videos that we've created, and especially over the past year, we have lots of new ones. So if you feel that your insurer or insurance producer acted improperly, you have the right to file a complaint with us. And so some examples of those improper actions include improperly denying or delaying payment of your claim. And that can be your entire claim, or that could just be a portion of your claim. Improperly terminating or canceling your insurance policy. Raising your insurance premiums without proper notice. Making false statements to you in connection with the sale of insurance or the processing of insurance claims, or overcharging you for services. And that includes premium finance charges. And so I'm going to talk a little bit about preparedness with regards to natural disasters. So that's what my part here is going to be about. So Marylanders in recent years have sustained significant damage to homes. So due to like Superstorm Sandy, for example, other floods, tornadoes, while none of us can control natural disasters, certainly there's steps that you can take to lessen your exposure to those types of losses and ensure that you have appropriate insurance to cover potential damages. With regards to your automobile coverage, it's important to understand the parts of your automobile policy. Liability, that's what you need to put your vehicle on the road legally in Maryland. And then the collision and the comprehensive part. Add on the collision and the comprehensive parts, and that's what people think of as full coverage. But you can separate the collision and the comprehensive. A person can carry just collision, so just have their vehicle covered if they cause an accident, or just comprehensive. And I'm going to go over what the comprehensive part is here. So when it comes to auto insurance coverage, comprehensive coverage is the coverage for your property damage to your insured vehicle resulting from occurrences other than collision, right? So comprehensive could be considered other than collision. And so that's going to be things like flooding, theft, vandalism, glass breakage that did not result from an accident, a vehicle striking an animal. So just some examples of comprehensive coverage. And it's just important to know if this makes sense to you, that this is going to be an insurance that you carry. Again, it says at the bottom, if you have only liability coverage, your insurer will not pay for damage to your vehicle. And now I'm going to switch to homeowners coverage. With regards to natural disasters, it's important to review your policy and determine what is covered and what is excluded. And so look at it. Are you covered for windstorm damage? Do you have coverage for debris or tree removal? It's pretty likely that you do. It's important to understand that that might have a limit, a cap on it of possibly only $500. It's really important to just understand what it is. What about water and sewer backup? Do you carry water and sewer backup in case water backs up into your basement? That's going to be something that you add on to a basic homeowners insurance policy. But in Maryland, when you're purchasing a new policy, you are going to be reminded, because your agent or your broker has to ask, if you would also like water and sewer backup. And it's something that you want to consider, especially if it's happened to you in the past and you think it might happen again, or you have valuables in your basement that you want to protect. As well as, does your policy cover additional living expenses? And that's going to be those expenses that you're going to incur if you can no longer live in your home for a period of time after you have a claim. So after something's happened, maybe you have to live somewhere else for 6 months while the repairs are being done to your home. Find out what you have for additional living expenses in your homeowner's insurance policy. And as well as if you are a renter, in your renter's insurance policy as well, it's important to understand your additional living expenses. And this is a document that is available on our website to help homeowners understand their declaration page. And so it's a one-page document to help you understand what you're looking at when you're looking at the first page of your policy. It might look something like this. I just got a renewal for my own homeowner's insurance, and it was a really great one. It had a picture of a house. It had arrows. It was super easy to understand. And maybe you'll get something that's just super easy to understand, but maybe it'll be a couple columns. And this can kind of help you understand by defining what the different parts of this policy is. So here we show that the dwelling has $250,000 of coverage. That's the first number in that blue box to the left. I'm not going to go through it all, but just for example, that shows you the different parts of your policy. And then we have this document to kind of step you through it and help you understand it. And of course, you can always call us and ask questions as well. So again, do you have enough insurance coverage? Make sure that you have enough coverage to repair or rebuild your home in the event of a disaster. Ask your insurance producer or insurer, if you call the insurer directly, about purchasing coverage to protect against inflation. Notify your insurance producer or your insurer if you make improvements or additions to your home to ensure they're covered. And that's really important. You do, if you added on a room or underwent a major remodel of your home, you do need to talk to your insurance producer or your insured to make sure if something happens and if you do have a fire, that now you are insured for what it's worth now. Determine whether you need additional coverage for antiques, collectibles, jewelry, computers. It's kind of, valuable things. So if you have an extensive collection of baseball cards, it's not necessarily going to be something that's covered under your basic policy. You're going to have to talk to your insurer. You're going to have to talk to your producer about that. and it might have to be scheduled, or it may, you may be paying a little bit of additional money to cover those valuables. It's really common that this happens in the case of jewelry, because a common homeowner's insurance policy only has a $2,500 limit in some cases for jewelry. You know, and some people have, they collect some jewelry and they have several $1,000s more. If you want to insure it, you need to talk to the insurer or the producer and make sure that you get the coverage that you need for the items that are valuable to you. It's important that you know the difference between ACV and RCV. And so you may be asked, do you want an ACV policy or RCV? And it's important to understand the difference. And so I'm just going to use a simple example to demonstrate the difference, sort of, instead of just reading the slide to you. So for example, say you need a new bed, you need a new mattress and box spring, you know, set, and you purchased it for $500 10 years ago. It was purchased for $500. Well, if you have an ACV policy, what is that worth today? Well, what is a 10-year-old $500 bed worth 10 years later? Maybe it's worth $100. ACV policy, you're going to get $100. All right. With RCV, replacement cost value, you bought your bed for $500 10 years ago. With an RCV policy, that's going to be replaced with a new bed. So that $500 bed, maybe it's $700 today. And so you're going to have $700 to replace your mattress and box springs, essentially. And so that's just an example. So with actual cash value, it's the cost to replace the damaged property minus depreciation. So with the bed, that's where you lost that $400 and you're only getting $100. They took out the depreciation. With the replacement cost value, they're going to replace it at full cost without depreciation. And this is something important. How much coverage do I need for my household property? I'm actually just going to go back a couple slides real quick, point something out.
Yeah, I can take it. Oh, Steve Swain.
Back on this slide.
Hold on, let me mute.
All right, so I'm back to this slide. And if you look at that same little box I was looking at before, which is the blue box, top blue box on the left side, where it says coverages and property, you're going to see personal property. So personal property for this person, they have $125,000 of personal property. That's what they're paying for. That's what they're going to use to replace their things, their belongings, the things that they store in their home. So back to personal property inventory. It's super important that you make and maintain an inventory of your personal property. And that, I mean, that can appear to be a cumbersome and daunting task. Without a doubt, most of us have quite a few things. I'm just going to pause real quick and see if I can get rid of that background noise. Okay. So it can seem like a large task, and it is to some extent, but it is very important. But there's an easier way to do it than just going through your house and writing everything down. For most of us, that would just take a very long time. You can go through your home and just take pictures and take video. You can convert these pictures and the video to a list if and when you need to. You have the pictures, you have the video, and then at that point, if you need to file a claim, you're able to generate a list from the pictures that you have. And so it's important. It's important to take the time to go through your house and take those pictures. It should be several pictures of each room from different angles. And don't forget about the things that you store, the things that you store in drawers, the things that you might store in bins under your bed, something like that, closets. You're likely paying to insure those things. And there's a good chance you're going to forget about them if you had to generate a list without any photos or video to look at. So it's just important. Go through and take lots of pictures. Take pictures in the closets. Take pictures from different angles. Make sure you kind of capture everything. And then hopefully you'll never need to use those pictures again. But store them somewhere safe. So for a lot of us, we're just going to go to our Gmail or something like that. We can store them in the cloud. And that's fine. You might want to store them in a safe deposit box or something that is fireproof. So an updated inventory, it makes it easier to file an accurate and detailed insurance claim. It makes it easier for you to get paid for your things. It makes it easier for you to generate that list. There's apps that can help you with that. The National Association of Insurance Commissioners has an app. I think some people are perfectly capable of, doing this on their own, storing those pictures on their own. But if you want, there's lots of tools out there, and we also have resources on our website as well. Sorry, something. I have a little technical error, and I don't know where it's coming from. Cheryl, can you see my screen?
It's still on the same inventory screen. Patty.
Perfect. That's what I wanted to get back to it. All right, there we go.
There we go.
So thank you. So what isn't covered? And this is with regards to homeowners insurance. What is not covered under your homeowners insurance policy with regards to these natural disasters situations? Mudslide, not going to be covered under your homeowners insurance policy. Earth movement, so that's earthquake. It is possible that you can buy a separate policy for coverage, but under your basic homeowners insurance policy, you're not going to be covered for earth movement, as well as groundwater or seepage. And you're not going to find coverage for that under a separate policy. And then the big one is flood. So, a lot of folks in Maryland live in high-risk flood zones. They have to have flood insurance if they have a mortgage. But for the majority of us, it's a decision that we make on our own, based on the information that we have. And you might not know a lot about your own flood risk. You might, or maybe you don't. And maybe you just know from talking to your neighbors or understanding what happens when it rains in your neighborhood. But you can use the website floodsmart.gov, and it will help you better understand the flood risk for your home. There are private insurers that offer flood insurance. However, most people purchase flood insurance from the National Flood Insurance Program. And the National Flood Insurance Program's website is floodsmart.gov. And you're going to have an opportunity to explore the maps, put in your address, and learn about your own flood insurance risk at that page. It's important to know what your deductibles are. Super important, especially because in Maryland, you might have more than one deductible. And so I think that the basic flat deductible is fairly easy for most people to understand. So in the example that I showed with the declaration page, that had a $2,000 deductible. So that's a pretty straightforward concept for a lot of people to understand. The first $2,000 is your responsibility. And then beyond that, it goes to the insurance company. But that first $2,000 is your responsibility. So it's important to make sure that makes sense to you. Is $2,000, as an example, is that an amount of money that's reasonable for you to cover if you were to have to make a claim? Is $2,000 reasonable for you? And if it is, great. And if it's not, if it's too much, then you do need to consider lowering your deductible. And also keep in mind, if you raise your deductible, so if it's $2,000 and you go to $3,000, you're likely going to save money on your premium. And so for some people, it is a really good way to save money on their premium. And so that's kind of the deductible that we all basically know about. In Maryland, you can have a second deductible, a percentage deductible on your policy as well. It's just really important for you to understand. Number one, it's important for you to understand whether or not you have it. Is it in my policy? Is it not part of my policy? And then if it is, you need to understand what it means because it can be a little bit confusing. At the bottom of this slide, I have this example. If your dwelling is insured for $100,000 and your policy has a 2% deductible for certain perils. So I'm going to say hail. All right. So you have a 2% deductible for hail and you had hail damage. Your roof was destroyed. So in this situation, this home is insured to $100,000. The percentage deductible is 2%. And so their deductible would be $2,000. Okay. It's fairly straightforward math. But a lot of houses in Maryland are not insured to $100,000. It could easily be $500,000 or more. That math looks a little bit different. If my home is insured to $500,000, the math looks the same. But if my home is insured to $500,000 and I have a 2% deductible, well, how much is that? That's $10,000 out of my pocket. Maybe that works for me. Maybe that's great. Maybe this is exactly the policy for me. But maybe it's not. Maybe $10,000 isn't a realistic amount of money for me to come up with. And in that case, you do need to look at your policy. You need to talk to your insurer, talk to your insurance producers, and find something that works for you. And next up is Cheryl. But she just disappeared. Welcome, Cheryl.
Hi, sorry, I had a dog issue there for a second. Hi, I'm Cheryl Coons. I'm in the Consumer Education and Advocacy Unit at the Maryland Insurance Administration, and my title is Insurance Specialist. So we're going to be going over some information about the claim process. And when should you report damage to your home or your property? Well, before reporting the property damage to your home, it's a good idea to find out what your deductible is, as Patty was describing. If the damage is minor, just a few shingles were damaged, or it might be better off just paying it out of pocket instead of filing a claim. But you have to remember, you might not be able to see all the damage, so you may want to have a contractor inspect your home to see if there's some hidden damages. Next slide, please. So if you believe that the damage is going to cost more than your deductible to repair, or there's a lot of damage, you may want to file a claim. It's important to notify your insurer as soon as you know that there's damage and you decide. So the easiest way to report the claim is to call your insurance company or call your producer directly. They actually do have some online applications too, but if it's a devastating loss, you may want to call your producer. Next slide, please. So the things that you'll need when you're filing the claim, first, it's nice to have your policy in a safe place. So you're going to want your policy number. But if you don't know your policy number, your producer will have it and can look it up by your address and phone number. And then you'll explain what's happened and what you believe the extent of the property damage is. So if you're not staying in your home, if your home has been damaged and you're not able to stay there, you want to make sure that you've provided your contact information to the adjuster and or the producer so that they're able to get in contact with you. And if you can take pictures or videos of any of the damage, and that's only, of course, if it's safe to do so, and pass those on to the adjuster and or producer. So what do you need to ask when you're filing a claim? So when you're filing a claim, a lot of times through the claim process, there'll be several people assigned to your claim. Again, it depends on the type of loss it is, but doing a disaster presentation, we'll look at it as a disaster situation. You might have a catastrophic adjuster, a field adjuster, a desk adjuster, and so on and so forth. There might be a contents adjuster. There'll be many people involved in your claim. So you want to make sure that you start with a spiral notebook or a notepad and keep a list of who you talked to, who was the person that you spoke to. You're always going to use your claim number that was initially assigned as a reference number. How long do you have to file a claim? So in a catastrophic situation, of course, you want to file your claim as soon as possible. And as we talked about a little bit earlier, if it's not a catastrophic loss, and you want to wait until you have the assessment by a contractor. If you need estimates to make repairs before you can file a claim. And you also, you need to know what your policy is going to cover. As Patty went over on your declaration page, how much coverages do you have? And what type of coverages? Next slide, please. Excuse me one second. Sorry about that. So what something else that you want to ask, does your policy cover hotel costs, and for how much, for how long? So what that means is that if you are displaced from your home due to a fire or whatever the situation is, you're going to need somewhere else to reside. So the insurance company will allow either a certain amount of time or a dollar amount for what's called ALE, or additional living expenses. So, and then as far as your deductible, there may be separate deductibles for hail, hurricane, wind damage. You need to know what those are, as Patty went over that. And if there are any special processes or procedures that you need to know about. So mitigating your damages. If you have water in your basement, what will the insurance company, what do you need to do? Get a mitigation company in there to prevent mold. They might need to take your carpet out, whatever the situation might be. Next slide, please. So there are 3 different types of adjusters. And the insurance company will have its own adjuster that is employed by the insurance company that will make an assessment of your damage. When there are maybe multi-dwellings that are damaged in an area, an insurance company may employ an independent adjuster. So that would be at the expense of the insurance company, but not an employee of the insurance company. So that adjuster would come out and create an estimate. And then there's also a public adjuster. So a public adjuster's position would be something that you would employ and would negotiate the claim on your behalf, create an estimate, and would be paid a percentage of your claim. So if you have $100,000 in damage, it's possible that $30,000 of that would go to the adjuster, depending on what the rates are by that adjuster. So you want to be very clear with the public adjuster what his or her fees are. Next slide, please. So how do you get a settlement offer, and who gives that to you? So the company adjuster or independent adjuster will calculate the amount of the damages to your home and or property. They'll review your policy and determine what deductibles may apply and if there are any limits on what will be paid. Once they've made those calculations, they'll contact you and or your public adjuster or your attorney. Sometimes people have attorneys in large losses, and share their estimates and calculations with you. Okay, so how long will it take for your insurance company to settle the claim? I mean, everybody wants their claim settled fairly quickly, but in most cases, in a rebuilding process, it can take 18 to 24 months sometimes. It just depends on what type of loss it is. And after a major disaster and a total rebuild, 18 to 24 months is more likely of the normal turnaround time frame. Um, Again, this is just that it depends on how the claim will be settled. So your claim is not over until it's settled. In most cases, if it's that 18 to 24 months, it's possible that you would have 18 to 24 months to settle the claim. So it's open until it's settled. So if you're not satisfied with the amount of the settlement, it's not enough to just say you're not satisfied. There has to be merit behind that determination. You can't look at your neighbors and say, well, your theirs was settled right away. All policies are different, the coverages are different, deductibles and so on and so forth. But if the insurer denies a part of your claim, it's a good idea to ask for that denial in writing and keep that with that same paperwork to review your policy and see why that portion was denied. And if you don't believe that the offer is fair, again, they're going to ask what's not fair. So you're going to have to justify or explain what the cost is, what the cost difference is, and what you're asking. And then it's possible you would contact the insurance administration. We can certainly review a certain situation as long as the coverage is there, and we can possibly assist in that aspect of it. And it's going to again depend on your policy language. You can actually seek arbitration or even file a lawsuit, but that's certainly hope that doesn't get to that point, and hopefully it can be rectified before that point. Next slide. But if you don't, again, I kind of went over this already, depending on if you don't feel the offer is fair, you can certainly reach out to the insurance administration for assistance. If you experience damage in your vehicle and decide to file a claim, you want to make sure you call your insurance company as soon as possible. You can have your vehicle taken to any shop that you choose, and you'll want to get an estimate of the vehicle damage. Next slide. You do have the right to repair facility of your choice. You can take it anywhere that you'd like. Your insurance company may have a list of vendors that they use, but you can take it wherever you want. Your insurance company will look at that estimate and might even send its own adjuster to that facility to do its own estimate of repair. If you disagree with the estimate, you have the right to take it somewhere else. So if the insurance company has told you to take it to Joe's garage and you want to take it to Larry's garage, you certainly have the right to do that. You just want to make sure you keep copies of any of the estimates together for comparison. So if your vehicle is deemed a total loss, the insurer will make a settlement offer that is ACV of the vehicle immediately prior to the loss. That just means what was your vehicle valued the day of the loss before the accident, and you of course would be responsible for your deductible under first party claim, but they will pay it at ACV or actual cash value. In Maryland, your vehicle is deemed a total loss if the damages exceed 75%. So if the repair of your vehicle exceeds 75% of the actual value or the fair market value, it can be deemed a total loss. The repair calculation can include possible hidden damage or supplemental damage that the insurance company may think that, they're going to make a business decision that even though it's not 75% damage right away, these additional supplements or these additional rental amounts will deem the vehicle a total loss. So they can make that business decision to total out your vehicle.
Cheryl,
Yes.
one comment. It looks like we have 5 minutes. However,
Okay.
it might go longer. So I just
Okay.
wanted to make a sort of a warning to everyone. I think it'll probably go past 3 in here, but if we all disappear at 3, we're being sent back to the other room. So
Okay. I'll try and be quick. Taking next slide. So when you have your vehicle's a total loss, the information that your insurance company is going to provide to you is the settlement offer. They're going to need to provide to you how they arrived at that settlement offer, including any agencies that they've used in comparable values, CCC reports, or guidelines, and what they use to make the determination. The insurance company is required to respond within 7 business days of your request for that information. Next slide. So if you think your car is worth more than what the insurance company offer you, you can attempt to negotiate with your insurer, but it's not just, you can't just say, well, I think it's worth more. You will have to provide them with comparables that may not have been used in their report that they provided to you. If there are other vehicles in your area that you feel would increase your vehicle's value, you would need to provide that to the insurance company, and then that's where the negotiation may come into play. Next slide. So, in summary, so contact your insurance company properly after sustaining a loss. Take photos and or video of any damaged areas. Make only repairs necessary to prevent further damage. So in this case, if there's, you need to tarp your roof, you want to make sure you tarp that, but don't make any permanent repairs until talking to your insurance company. Also, don't remove any property until the insurance company has seen it. In other words, if you have damaged clothing, don't throw them away before your adjuster and or claim associate has seen that. Next slide. Keep all the receipts of any emergency repairs, the tarping, the rental of fans, whatever the situation is. You want to have that copy of a list of items. So description and quantity of items, date of purchase, approximate age if you have it, cost, time of purchase, and estimate of what the replacement would be. After the loss, you want to make sure that you are present when your insurance adjuster inspects the property. Make sure he or she sees everything that has been damaged, and don't accept any inadequate settlement offer. Cashing a check can bar you from seeking additional compensation. I'm going to confirm in writing that it will not. So, and you can get checks along the way, and it won't settle your claim, but make sure it's not a complete settlement offer when a check is made out to you. And for contact information, please feel free to contact us with any additional information or questions or concerns at 1-800-492-6116. Do we have time for questions, Patty?
As far as we're here, I mean, as long as we're here, we have time for questions. There's nothing. Okay. Oh, we just got our 5-minute warning. Okay, so there's nothing in the chat.
I see. Is there 2 in the chat?
Check again. Yeah, there's nothing for us. Oh, well, can you see questions in the chat?
Uh-huh.
Can you read them? Because maybe you're seeing a different chat than I am.
It was just something from Kevin Wagner.
Okay. Yeah.
Waiting for the next session, and okay.
Yeah. So those were dealt with in the other room. If anyone has any questions, again, if you can put them in the chat, and if you are, we have 5 minutes. If you want to unmute yourself and ask a question, feel free to.
So you mentioned apps. Are there some recommendations in terms of apps, or are there apps on the Flood Smart website?
When I was talking about it, I was talking about the inventory apps, and the National Association of Insurance Commissioners has an app you might want to look at with regards to FloodSmart, or the National Flood Insurance Program. It is possible that they have an app. You might want to just look for it in the Play Store.
So the national, so NAIC, or the National Association of Insurance Commissioners, has an app, an inventory app. It's called the Scrap app, if that's what you're referring to. But that is something you can download on your phone, take pictures, and it automatically inventories in the app.
Okay, does it, so that's really there isn't like a tablet app, it's just only phone apps?
I don't know how to answer that.
Me neither.
Can you, I mean, if,
So
I don't know.
you get, there are software apps that you can download. It allows you to take pictures in terms of your apps. With the phone apps, sometimes people feel that the privacy is compromised because they're
I
looking.
understand. So you might even want to check with your insurer, if they have a private app. Some insurance companies do. And on our website, we have a disaster booklet that has an inventory list in the back that you can make your own. If you want to use your tablet to make your own inventory, this would be a great guide through that disaster brochure, that would help you to make sure that you're taking pictures of everything that you need, everything from your curtains to your dishes to your your toiletries, everything that needs to be replaced. But I am not aware of just a program that you can purchase to make that inventory, but that's not a bad idea. It certainly is would be helpful.
And if anyone else has any questions, just real quick, I'm just going to say thanks for attending, and I'm gonna stop the recording, but we'll stay on until we all leave together.